All right, let's go over the day's price action on ES. Do a trade recap. Well, I actually didn't take this trade. I traded oil mostly in the morning. I should have taken this, but I actually didn't mark this 1 hour zone correctly. So that was my mistake, and I did miss this run up. I did scalp a little bit of the drop after we hit the 200-day moving average, but this was definitely the better trade in the morning. So we go to higher time frames. Say we go, let's go to 1 hour. So this was the 1 hour chart. We have this overall uptrend that we've been holding. Tested, started down here, tested it once, haven't tested again. We came close here, but haven't tested yet. But that is the current overall uptrend that I'm looking at. And then we had this little steeper uptrend the past 3 days. So we started here at the bottom of the day or the low of the day on the 12th. Touched here, made another low, higher low on the 15th. And so I extended that out. And then here we also had a 1 hour demand zone. So this is a rally base rally. It's actually picture perfect. I actually only had this 45-minute zone marked down here, thinking that, this would be the stronger reaction because this was the closer to the bottom of the start of this big move. So I did not have this 1 hour marked. I should have. That would have helped me take this trade, but I didn't. But let's go over what we saw. So we have this overall uptrend that corresponds to the same area as this 1 hour demand zone. So that's already two areas of confluence that we're looking for. Next, we kind of just wait and see what the volume does at that area. I also did have a zone up here. I did have an 8 hour that had peaked out up here, but we had came and we actually broke it just barely the day before, so I actually took it out because I didn't like how we had pushed up into this zone and we just held it all night. So there wasn't like a strong sell-off from sellers in the market. And since we had broken it just barely and just held it overnight and just chopped around, I took it out. So we'll go to the 15-minute, and this is what we were working with at the start of the open. Notice that the overnight action was really choppy. We do have FOMC tomorrow, so typically the days before FOMC don't provide the greatest moves due to people waiting for the data to come out. There is no interest rate hike coming out tomorrow. This is just the minutes from the last meeting and kind of what the Fed has to say on inflation and economic data. So that may have also been why today was a little better day to trade. We weren't really waiting on anything. We're just waiting for the notes from the meeting. So start the day off. Really nothing to say about this candle. It's half body, half wick, and we're still in this range. So if you look at this on the 1 hour, this is what Al Brooks in his books would call barbed wire. It's where three or more candles overlap and there's a wick sticking out. Hence the name barbed wire. It looks exactly like barbed wire. And you touch barbed wire, you get hurt. So you don't touch this. We don't want to trade anything in this range because anything could be a fake out. Just because this breaks the high doesn't mean it's going to go anywhere. Typically in a range like this, you want to short small body candles at the ends of the range or at the extremes of the range. I'm not really into range trading like this too much because it's pretty tight. So we're just waiting for zones to get hit. So candle up. Buyers pushed up a little bit more into this wick, but this is an inside bar from the previous bar. So really no moves to go there. No moves to look at. We did get a push down here on high volume. So that was kind of interesting. This is a case where even though you do get like a sign, like this could possibly be a sign to go long since there's volume coming in and a big wick down here. This is a case where you need to be disciplined and patient and wait for zones to get hit. Because just because there's a volume spike doesn't mean anything's going to happen, doesn't mean it's going to follow through. You have a much better chance of those moves following through when they hit supply or demand zones. So we're still in the range here, obviously, and these two bars overlap as well. So this is not a sign to me to do anything here. Again, this is the fourth bar that overlaps. First we pushed up into the wick of the first bar. Now we're pushing down into the wick of the third bar. This doesn't tell me shit. There's really nothing going on here. We're still in a range. It's a really tight range, 97 to 84. So like a 13-point range. Nothing really to look at. You're either wanting to see this trend line break down or bounce at this zone or see this trend line break. Now here's a perfect move right here. So we come down. There's one other thing to note. We've also been in an uptrend for 2 months, I think, a month, I don't know. But every dip has been getting bought. So we've really not had any pullbacks. I mean, we've had some type of pullbacks, but really anytime we pull back, it bought. Like everybody steps in and buys. So going short here, you're not really looking as much until like an overall trend line breaks to go short. So we did get this 15-minute candle here, drop down into the trend line as well as demand, and then we did spike on volume. And notice that this comes outside of the range. Volume signals are going to be much more accurate when they're not in a range. If you see a range like this, I wouldn't take any volume sign or any volume spike because you don't know what's going to happen. When this breaks outside of the range and then you get a volume spike, that is much more valid, especially when it lines up with a trend line and a 1 hour demand zone. So this would have been your signal to go long with a stop under the low. So if you go long here, and you could have taken this, I think, just at the close because it did offer, because usually I use about a 10-point stop for the 15-minute charts, and this would have given you plenty of room to the downside. This gave you like an extra, what is it? An extra 2.5 points to the downside under the wick, so that's valid. And then I would have targeted, personally, the 4,300 area, probably this resistance we had from the previous day and overnight, because there's no chance, or there's no knowing if this is going to break. So I would have at least targeted that. So this gives you about a 1.5 to 1 risk to reward ratio here. And it would have been a little tighter maybe if you tighten your stop a little bit, but if you kept it at 10, that's fine. So we go long there. Next candle, low volume, doesn't really show much, just kind of waiting. This sign right here that we got is still valid. Next candle, boom. Volume comes in, huge body, barely any wicks. Buyers are strong here. This candle engulfs the last like 15 candles, maybe 10. So that's a very strong candle. It's the largest candle out of this whole range. Notice that this is the largest one right here. And so, yeah, so that was a great trade. You're up, 10 points already. So see if we hit our target. And I wouldn't have blamed you if you're trying to scalp and you scaled some there because we did get a volume spike and this is at the top of the range and the trend line. So this could have came back down as well and just chopped around. So scaling some there, I don't think is a terrible idea. But due to the strength and the volume of the candle, it's it's not unlikely, but it's less likely to just drop straight down because this looks more like a true move since we're bouncing off the trend line and a demand zone. If we weren't bouncing off of any of those, then I would say that this may not follow through. But since we are getting areas where we know that bigger overall moves tend to happen from, you could definitely hold here if you scaled some. I don't think that's a bad idea either. Next candle, hit our target. Volume is down. So this to me shows that this isn't a reversal. And there's not really any wick or anything that shows that this is going to reverse anytime soon. We closed close to the highs. There's just a small wick here at the 4,300 level. Really no reason to close the whole thing, I would definitely scale a little bit more there at the 4,300. And then hold on. Volume down again. A little bit more wick, but really there's no reason to close anything here. We're past the high of the previous day. Volume didn't spike, so a reversal is not very likely. If anything, maybe a pullback into 4,300 to keep going, but you can still hold here. Now we get the volume spike. You can see down here, volume spike on an extended candle. Notice that this candle was big. This candle was a little bit smaller. This candle was a little bit smaller. Now this one is large. And when you get those large moves on high volume in your favor, scale some. Or if you got totally out there, I think that would be a great trade. That's a 25-point gain off of a 10-point risk, so 2.5 to 1. So that's a great trade. And I think this, what did this do? That next candle didn't do much. Let me take this off here. Kind of annoying. Next candle was very low volume. This is a spike at the top, which is usually an exhaustion move, but not really a reversal because there's really not a strong wick. The candle's strong. We're holding above the close of yesterday. Actually, the close of yesterday was here, the high of yesterday. Yeah, so this is just still a great trade. Volume comes in a little bit there on a smaller body candle. If you weren't out totally, I would get out there. There's no, and then possibly look for maybe a retest of the previous day high. See if that holds. But we're just getting pullbacks here. And then I don't think anybody expected us to push higher again, but here you get a volume spike on a candle that is a strong move in the direction of the trend. You could definitely scalp that if you wanted to. This red dotted line is the 200-day moving average, and that would have been my target to get out of everything because usually that is strong support or resistance. And so that's why I keep the daily 50 moving average, daily 100 moving average, and the daily 200 moving average on my charts. So we kept going up, get a volume spike in your favor. There's another volume spike on a smaller candle. I'd be looking to scale out a little bit there, because this is just a scalp. So you're looking at maybe like 10 points or so. And then you get the large, huge volume spike right at the 200-day moving average. That is your sign to get out. And then we all saw this massive rejection. Whew. That was a hell of a drop. And so I actually scalped the close of this candle. So I saw that the volume was extremely massive down here. The candle was full body, almost no wick. We were at a resistance or a support, I should say. But something like this, I'm expecting this to at least follow through for, 5 or 10 points. So I actually got short on the close of this candle, even though it was at this area. I was expecting us to extend at least a little bit into it, possibly test this trend line. And one thing that somebody pointed out to me was that we did form a 1 hour demand here. So if you were charting zones as the day was going on, which I think you should do, go back here, you see that down here is the start of this 1 hour demand zone. So I think you could scalp it at least to that. So this is what, 43.02 down to 42.94. So you could scalp that for about 8 points or so. So I went short there and scalped into here for about 9 points. Something easy. I wasn't expecting this to follow through this zone just because we consolidated so much here. And then we did have this trend line that we retested. And then if you were trying to play more, notice that this volume right here on this little hammer, the body is only like a point wide, is larger than the volume of this entire drop. So you have extremely strong buying down here. So It would have been a little bit of a ballsy play, I think, to go long here. I think you're better off maybe setting like a limit order halfway down the wick and then a stop under for very tight risk. Because I mean it's kind of hard to fight this huge drop and go against it. But the volume does help show you that buyers are down here at this 4,300 to 4,290 area, and they're buying because the size of this overall candle is about half of this. The body is like a tenth of this size, but the volume's more. So there's tons of buying volume down here. You do also have the support of the 1 hour zone as well as this trend line that we were testing on the other side of it. So if you want to go long for a scalp, I wouldn't blame you. We do finally get a push on lower volume, so you still don't get the volume spike coming in yet. You get a smaller candle here on almost the same size volume, so sellers are still present there, and this was previous support right here at this level, you can see. One thing I did note, I did mark, is this 45-minute supply zone. There's also a 30-minute right here as well. So I would mark this as 30. So you can see we're pushing up. If you limit order down here at 97, right here you're about 10 points up, 307. And then you do end up getting this massive spike at the end of the day. So this was a power hour trade. I don't typically like opening up new trades during power hour. But this would have worked out, and if you were targeting 45 minutes supply above, you would have nailed it. And that was about a 14-point trade or so. At least a 10-point if you got in at the close of this candle with a stop underneath. But like I said, that was kind of a ballsy play. I think there were a lot better opportunities in the middle of the day, specifically this run up, or even scalping this drop just because it was so big and so strong. So that's kind of the recap on the day using volume price analysis and the 15-minute time frame. And I hope that helped you guys, and I hope you learned a lot. So until next time, see you.